Hey, what's up, guys? Good to see you back here again. If you can hear me, let me know in the comments so I can literally get to see who and who is joining this particular live session. Let me know where you're joining this live session from. Good to see all of you right here. I'm super excited to be having this session with you. Let me know in the comments where you're watching this particular video or live session from. And in today's particular live session, we're going to have a very, very simple but a very powerful topic that I believe every trader should know. And it's talking about bias. When you talk about bias, it's one of the things that a lot of people have difficulty in actually getting. And once you miss bias, you literally cannot do anything in the market. You can make all sorts of mistakes when you miss how to track your daily bias. So that is basically what we're going to be doing in today's live session. Let me see your comments quickly, guys, so that I will know where you're watching and where you're joining this live session from. Okay. So I see a lot of you. I can see people from Uganda, people from Kenya. Good to see you guys. Good to see you guys. Good to see you guys. Somalia, Canada, Bauchi from Nigeria. That is Bauchi. We can see USA. Good to see all of you guys. And how do you really find your bias? If you are trading in a day, I believe most of you try to find what is your bias. And when we talk about bias, it's basically the direction of the market for that day. Yes, the direction of the market for that day. That is basically what your bias is all about. The direction for that day. Thank you, guys. I can see all of you. I don't want to spend so much time checking your location. Let's just get into business and talk about it briefly. It's been a while. I've been away, actually, but then I'm back. And I'm super excited to be back with you guys. So let me know your view about getting your daily bias quickly. How do you get your daily bias? How do you get your daily bias? I'm going to teach you something very briefly today. And that is going to help you to identify your bias, especially if you are trading, let's say if you're trading intraday, or sessional trading. That means you're trading within a session. You can easily get your bias without any stress. All right. So that is basically what I will be teaching you today. So yes, thank you, CryptoCan. I appreciate your name. I appreciate you. I appreciate you. So let me see in your own opinion, how do you get your bias before I go ahead to show you what I know. Yes. Quickly in the comments. Okay, my volume is low. My volume is low. I think, let me see what I can do. Is it only you or everybody? Is it the same thing for everyone? Is my audio very low? Please let me know in the comments. My audio. Is my audio very low? Okay, my audio is coming from one side of your television. Using previous high. Volume isn't good. Yes, it's low. Volume is low. Okay, let's see what I can do. Let me quickly see what I can do to help you out. How about now? Can you guys hear me loud and clear now? A bit okay. Whoa. Okay. So many people are answering the question I just asked. It says, when bullish, the candle will close above the previous candle using daily time frame. Okay, that's a good answer. Yes, volume is fine. Okay, let's forget about volume. So let's talk about how to find our daily bias. Without finding your daily bias, you literally can make a lot of mistakes in taking a trade. All right, let me see you comment about the daily bias. Yes, 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 yes. Okay, so let me show you what I normally do when I come to check my daily bias. All right, there are a few things I don't forget to do. You see, there is something called magnet for me. This is my concept. I call them magnet. All right, I call them magnet. They are basically price magnets. They are basically price magnets. All right, and they are very, very significant. When you see them on your chart, just know that price is going to be attracted to it. You know how a magnet attracts an ion? That is basically what you get to see with this simple concept. They are called price magnets. Now, whenever you come to your charts, don't make assumptions. Make sure you look at the chart and carefully follow what price action is doing. Do not be too rigid with price action. Allow price to tell you where it wants to go and carefully participate in following what price is doing. That is the best way to stay out of trouble in the markets. Okay, I will show you what I normally do. I will first of all look at where is the liquidity resting. All right, now first of all I will look out for liquidity. Now you can start from this. Let me show you the time frame you normally will do: weekly, daily, 4 hour, weekly, daily, 1 hour. All right, or you can do daily, 4 hour, 15 minutes. So you fall into any of the categories, it's fine. You don't need to get confused about this. The 4 hour, H4, the daily time frame, and the 15 minute. You select either of these. If you are in this category, you follow the progression. If you are in this category, you follow the progression. All right, so if you fall under this particular category, that is the weekly, daily, and the 1 hour. Now this is the weekly. Let me show you what the weekly is having here. All right, this is the weekly. We have buy side liquidity here, buy side liquidity here, and that is what we have on the weekly magnetic area. That's where the magnet is, and that is where price is attracted to. Buy side liquidity, this one, buy side liquidity. Make sure you clearly define where all these things are. Please look at this carefully. Clearly define it, and you would be able to know where the liquidity is resting. All right, where the liquidity is resting. So secondly, after marking these guys, after carefully marking out these guys, you can now go to the lower side of price and look at where price will possibly go into. Now look at this one. First, we have what? A fair value gap. No fair value gap here up until this area. Okay, now look at this. If you have at least 3 fair value gaps around here that are not mitigated, then you should expect price to retrace into them within a moment. But then for now, just look out for the fair value gaps that are unmitigated. There is no fair value gap here except this one. This is the only fair value gap you have across this particular swing high. Okay, now look at how the momentum of the price action is. Do you know that with this momentum, where you see price quickly went up, immediately after price left this particular fair value gap, that is after price fell to close above here, we came back and fill up this fair value gap. Now fair value gaps are one of my favorites. I cannot hide it from you. Fair value gaps are the most powerful for me. They are the most dominant institutional reference points. You don't joke with them, all right? So the moment you see this, you should anticipate price to trade down into this guy before going back up. Now, after doing that, now you can expect price to be attracted to this magnet. In fact, fair value gaps are more preferred than any of the institutional reference point for me. Yes, I'm telling you this because they are so strong that even a mitigation block or a breaker block will not be that strong if there is no fair value gap attached to it. I hope you know that. When you see these confluences, the confluences, they are more stronger than anything. I am in your Instagram DM. Okay, you can send me a message on Instagram. I am always there, okay? 1 week should align with the daily and the 4 hour. Okay, that's your own. Thank you for bringing that to my notice. So, after getting this correctly, now look at this. Can you see this fair value gap is trying to attract price into it? Is trying to attract price into it all this while. In fact, last week I even thought price would trade into this fair value gap before targeting this buy side liquidity. Okay, before targeting it. But then we will not know what is happening here. That is when we will now drop down to the daily time frame. Of course, you will not take trades just because you see this. You will not just say, I want to be taking this trade, I'm going bullish, and you're taking something around here. No, you don't do that. You will have to drop down to the lower time frame and get your entries on the lower time frame. Now, the daily time frame. Here is the daily time frame. Where most of you get confused, I'm not supposed to be telling you this. I'm supposed to strictly be telling my mentorship students some of these things, but then I will just give you an iceberg of it. Just a little bit of it, all right? Just a little bit of what I normally will teach my students. So, if you look at this carefully, look at this. Price has been trading bearish for a while. Why? Because we still have that fair value gap resting below here, the weekly fair value gap. What most of you get, where most of you people get confused is you will mark your weekly fair value gaps and then you will come to the daily time frame and you're still expecting those delineations to still apply to the daily time frame. Whenever you come to the daily time frame, start market structure delineation separately. Do it differently, completely different. So this is it. Here we have price went above here. Boom. Price took out this guy, went all the way to this area. If you look at this from here, you can see from here to here, price actually created a dealing range. A dealing range right here. Then if you come down here, you will see something resting here, a fair value gap, a fair value gap, and a fair value gap. 3 of them. All right, 3 of them are resting in this location. So, most of the time, you will get confused. Which of this one should I be expecting price to trade into? This is where most people get confused. Where should I be expecting price trade into? Let me teach you something. When you look at the PD-ARRAY, the PD-ARRAY is aligning all the institutional reference points in their order of importance. But then you can also bring in some of those PD-ARRAYs in confluence when you see 1 or 2 in one place. Just like you can see, this is a breaker. Price clearing liquidity below here. That is a liquidity. And price quickly went up, leaving you with a bullish breaker around this area. Which of them has a confluence? This one has a confluence of a bullish breaker and a buy side imbalance, sell side inefficiency, and they are both resting on the sell side, or that is the discount area of your price action. So if I am expecting price to trade down, I should expect price to trade into this guy and give me confirmation before taking trade. Now the daily time frame is still telling you that I am yet to trade into this area. When you look at this area carefully, it is the same area you see on the weekly time frame. So there is no exact place you will expect price to trade into is an area. If you listen to me carefully, you will hear me talk about area. It's an area. That entire area becomes your point of interest. In fact, the word point of interest is supposed to be an area of interest. AOI, area of interest, is supposed to be area of interest. Do you understand? Thank you. Minor swing trader who executes trade on 4 hour, what is good for? Don't worry, we are just looking at it, guys. We are just looking at this gradually. We are dropping down to the lower time frame. Okay, for the trader that is looking at this for this moment, you will see how I will arrive at where I will finally make my trading decisions. All right, don't worry, just carefully follow what I'm doing. So when you finish with that, the next thing to do is to now drop down to what? The 1 hour time frame. Remember what we did? The 1 hour time frame. Now, the 1 hour time frame is also showing you that because of this location, no matter how powerful the setup I have in this area, I can only trade back into a certain area to create energy for the higher time frame to align. Everything you see the lower time frame is doing is trying to help the higher time frame achieve the objective of price movement. That is basically what happens when you see price do that. And earlier today, I was actually looking at this and I was expecting price, because I was seeing price trading back into this bearish order block. Earlier today, I saw price did something like this as a counter trade coming in. I expected price to trade from here back up to this guy, clearing this buy side liquidity. And once you clear this buy side liquidity, you will enter this guy just for alignment so that we can finally achieve the weekly objective. But before CPI came out, CPI actually came out, and then we had a massive this indecision. There is a mixed sentiment in the market. So that is where you see this market structure shift come in. The market structure shift is not ready for trade reversal. And that is where you get it wrong. There are market structure shifts that you don't have business trading when it has not reached the higher time frame area of interest, right? Area of interest. So most of the time you will end up seeing a market structure shift, and all of a sudden price continues downward or price continues upward. That's simply because the market structure shift is not supposed to be traded for a long time. All right, if you see a market structure shift in that direction. Now, let's have a look at where the 1 hour time frame comes in very handy. So the news came in massively. I expected price, and even now I am not losing hope on this bearish order block. This guy, this bearish order block should be traded into maybe tomorrow, and after trading into this guy, we will now target this area. We have a liquidity void resting here, all right? But price will prefer to achieve this weekly objective before finally coming back up to that area. So the area we were looking at from the daily still rests below here. I used to tell you that it's closer for price to do this and prepare for the movement up. If we have the shifting structure here, it's better we take this one than this one. Why? Because this has not reached where the higher time frame objective is resting, and therefore you're going to see some kind of a sluggish movement, or you're going to be induced. That is the smart money trap. You're going to be trapped into this. So when you finally come to the lower time frame, you will look at where the short time objective is and take your trade in that direction. After that, you can easily drop down to the lower time frame and take your trades, then expect the higher time frame to align with that. So basically what I'm saying is that I am still expecting price to trade into this guy, maybe tomorrow, trade in here, give a shifting structure and continue bearish. Two things to do. For you that is trading smaller time frame, you can expect price to give you a confirmation here and take your trade bearish, or you can carefully wait for price to start the bearish movement, the bullish movement after it has achieved the higher time frame objective before you can join the higher time frame in that. And that is where you get the bias is your friend. The bias is always your friend. You don't trade against the bias. Even if it is the short time bias you have, you don't trade against it. I was showing one of my students earlier today a particular trade. I know many of you will have fallen victims of that. GBP-JPY. Earlier today, I was having a one-on-one session with my student. And for those of you who want me to mentor you one-on-one, you can reach out to me on WhatsApp. So he was expecting this particular trade here. This is the 15-minute time frame. How many of you will have taken this trade? If you know you will have taken this trade, the moment you see it, let me know. And I will show you what happened. Perfect. How many of you will have taken this trade for a bearish move? A bearish mitigation block. How many of you will have taken this short? Here, perfect. How many of you will have waited for price to come back up before you take the sell? Here, we are going. How many of you? A lot of you will have taken that sell. All right. Yes. How many of you will have taken this sell? Crypto can. You got stopped out on GJ. Crypto can. Did I make mention of yen basket bullish? I'm not sure if I actually spoke about. Yes, somebody entered buy. Yes. I can tell you that you lost $40 on it today. It confused me. So let me show you what happened. Yes, I know a lot of people will get stopped out because you don't look at the higher time frame and have an idea of what it is happening or what is happening there. All right. So quickly, guys, for those of you who want to have access to our mentorship, you can reach out to us on WhatsApp, or you can simply get access to it. The link is in the description of this video. And then for those who want to also get hold of my book, it's right here. You can see the Smart Money Accelerator guide, where you have a lot of knowledge shared in the book. I've gotten a lot of testimonies. Very simple and straightforward. Not many details captured, but then the information captured is going to help you a lot to understand how to trade smart money like a pro. You see, very, very well detailed book. You can get the book. The link is in the description of this particular video. Please don't hesitate to do that. Make sure you have access to the book so you can reduce so much trouble or so much unnecessary information in the markets that you don't need. All right, so please get it. The link is in the description of this video. So let's get back to business, where I was showing you this particular trade. So let's go into the higher time frame, the weekly time frame. The weekly time frame. What can you see on the weekly? What can you see on the weekly? What can you see on the weekly? Notice what happened on the weekly time frame. You have, boom, you have this buy side liquidity resting. Buy side liquidity resting. Let me put it, buy side liquidity. I did this analysis with my student, one-on-one student earlier today. And down here, we didn't close below here. When I saw this happening, I knew that definitely many people will get confused about this. We couldn't break below here. We only cleared liquidity. and we're going to target the buy side liquidity. We also have another one here, we have another one here. This is what actually got my attention. All right, when I saw this, I knew that price was not going to reverse immediately, coupled with the fact that most of you don't study to know what is happening globally. Yesterday there was a particular relationship, a trade relationship between China and US. China and US came to agreement on the tariff, import tariff. They are ready to slash it for the next 3 months. That is 90 days. And that means we're going to see a lot of market spike in Asia. Japanese yen we're going to see a lot of market spike in the markets. And when you check what happened yesterday, you see what happens in the dollar, what happened across other currencies, including gold. We saw a massive reaction from that news, including Asia. So what you see happening there is not just ordinary. You can see it reflected on the chart. So when I saw this, I knew that what is happening here is going to reflect on the chart. The buy side liquidity resting here was what attracted me. When I dropped down to the daily time frame, I saw price was yet to trade into this buy side liquidity here. Yes, into this buy side liquidity. And on the 4-hour time frame also, you can literally see that price traded back into this fair value gap. This one traded back into this fair value gap and quickly turned back up and mitigated. There is a very small fair value gap here, depending on your broker. My broker has a very small fair value gap around that area. Very small fair value gap. Now, this is what attracted me. This is what attracted me. Many people were expecting price to trade downward into this area, but then when I saw that there is a resting liquidity on the weekly and here on the 4-hour, I just knew that that is not going to happen. And that was why I was not encouraging my students to take this sell. Yes. You can't get this because of the liquidity resting here. Now, if you have a shifting structure after now, it's going to work. Why? Because you have already achieved the weekly objective. So if there is any shifting structure after the liquidity has been cleared, you're going to have access to that trade, and then the trade is going to give you a ride without stress. So basically that is it, guys. My audio is low. It was nice. It was a nice trade. There was CPI. No, the trade actually worked perfectly. Okay. If you cannot get my book from the link, please kindly reach out to me on WhatsApp. My WhatsApp link is in the description. I'm going to show you other ways to get it. All right. Other ways to get it. So guys, this is all about our today's session. I just came up to just give you a recap on these things, and then I'm fully back now. We're going to have more sessions together. Good to have you all here. I appreciate your efforts for creating time to join this live session. Let's meet tomorrow. Tomorrow we're going to do it quite earlier, and let's see what the market has for us. Okay, thank you guys.